Okay, I have been getting a ton of questions from people that are just interested, clients, all kinds of stuff of just kind of what's going on in the market right now. Obviously, there's been a ton of interesting things in the news for the last couple of months, and people just want to know what's going on. So I chose this picture because that's kind of what a lot of people are feeling right now is just they're not sure what's going on. So I have some really good data, some really good stuff, and at the end, we'll be showing you guys some pretty good charts that should kind of help explain it. But just wanted to go through this. Might be a little long for some people, but I'll try to breeze through this as quickly as possible so you can kind of see what's really going on with real estate. So this is all coming from data that I've been collecting for well over 10 years now. So pretty good stuff. One thing to take from this, a lot of these numbers may or may not make sense, but this is just the types of buyers that we've had. Our cash buyers have been going down for about the last 3 months. Now, 22.5% is still very high in terms of cash buyers. And I think a lot of those are folks coming from other states where maybe they sold a house and they're buying a house cash here because the prices here are still so much cheaper than a lot of these other places. But this has gone down. I would suspect anecdotally and from what I'm seeing that this is mostly investor activity kind of pulling back. And I think a lot of those investors probably were throwing money into the stock market or some places where they were getting better deals. Obviously, today we're sitting at May 23rd. 30 days ago, the stock market, Bitcoin, all of those things were down quite a bit. So I think you saw a lot of people kind of buying that dip there. And that would make a lot of sense because obviously all of those things have come back to, they wiped out all the losses that they might have had and they're actually higher than they even were. So that kind of makes sense in terms of where our buyers were coming from, that those cash buyers went down. As far as distress sales, this is always a question that I get from people is like, are there foreclosures? So this is foreclosure commenced, meaning the bank is trying to foreclose and the seller's selling it before they can be foreclosed on. So this is 32 in the entire MLS. You guys are going to see for all property types, we have well over 8,600 that are for sale right now. So 32 is basically zero. And this has been the same going back really for a long time, at least 6 years. But really, there's no distress sales. I mean, 32 is just like I said, almost zero. And most of these are folks that typically pass away and then just nobody's dealing with the mortgage. A lot of times that's what these ones end up being. So there's a handful. I mean, obviously, there's 32 in all of our MLS, which goes everywhere, but not much, nothing to really be concerned about. So now we're going to go over the entire market and then we're going to go into kind of breaking it down by price range. So a lot of these numbers may or may not make sense. The blue highlighted things here, this is what our year over year looks like. So our inventory is higher. 8846 is where our total inventory is. And this is all property types. This is not just single family. So sometimes you guys will see in the new single family stats, and those are good to know. But in terms of just what the entire market is doing, it's always good to kind of understand what the entire market's doing because that's kind of what influences things. So definitely higher inventory, our month supply, which is really what dictates where prices go. So anything under 4 months inventory is still a seller's market. So at 3.58, we're still in technically a seller's market. It's just not a crazy seller's market. When we were in 21 and 22, when interest rates were 2%, 3%, this number was under 1 month supply, and that's why you saw prices going crazy. But really, still under 4 months supply is still technically a seller's market. It's just not a crazy seller's market. So still overall pretty good. But as we go into these price ranges, you guys are going to see some very distinct things. So this is a new trend that's really only been happening, you can see, for about the last 5 to 6 months now. But our entry level, which is 350 and under, and I keep these numbers consistent because I've been tracking them for a long time. I'm going to talk a little bit about where this price break really happens. But this is actually probably the toughest market to sell in right now, particularly if it's a condo or townhome. And we'll kind of look at that. But condo townhomes are definitely struggling more so than single family, and especially in this lower end price range. So 4.03 months supply, that means this is technically a neutral market. 4 to 5, or we used to say 4 to 6 months supply is a neutral market, which means the prices really shouldn't be going up or down. But there definitely is some more supply here. I also think this is where you've seen some smaller investors selling off some properties, probably to be liquid if they wanted to do other investments or for whatever reason. So definitely in this price range, you are seeing a little bit more inventory. Now, this is great news for buyers. For us, the last two buyers that we've worked with, and one was in this price range, one was actually a little bit higher, got amazing deals. We've been able to negotiate some crazy deals, lots of closing costs. Both of them, we got them for 10 grand under what it appraised for. So this is great news for buyers, especially because most agents are not real educated on this. And to them, 4 months supply feels like this crazy buyer's market, because they really only used to doing real estate for the last couple of years, when, especially like I said, in 21 and 22, these houses in this price range were selling right away. Now they're not. If they're priced correctly, these will still typically sell pretty well, but there's a lot of very bad listing agents that are not giving sellers good advice. And I think a lot of sellers in this price range are taking price cuts and price deductions that they probably don't really need to. They just need to be a little bit more patient and understand where the market is. But on the buyer side, like I said, we've been getting our buyers some incredible deals in this price range. So our next one here, from 350 to 800,000, you kind of see a totally different story. And this has really only happened for the last 6 months. This price range was always usually higher inventory than the entry level market up until about 6 months ago. And those two things have really flipped. Now, I think the true price break on this, and I'm not going to change it for these stats because I want them to stay consistent, but the true price break when I go in here is about 5 or 550, depending on what part of town you are, up to about 900. That's really where it's most competitive right now. In some parts of town, even at 500, you're still getting, a little bit more inventory and some pretty decent deals. But as you can see here, 3 month supply of inventory. Now, definitely more houses for sale than what we had last year, but still at 3 month supply, definitely a seller's market. Just like I said, not a crazy seller's market, but the sales price to list price bring 100% in this price range. What this is telling you is a house in this price range, especially in that 550 to 900 range, if it's priced correctly, it's going to move. And to some degree, even up to about $1 million. We have a listing right now that we just put on for 970, and we got 5 showings in the first 4 days. So you're still seeing a lot of buyer activity, especially once you get over that like 600 to 700 range. That seems to be the sweet spot where people are less affected by interest rates, less affected by some of these things going on in the news. So those folks are really still doing quite well. And then our luxury or over $800,000 market, still really, really strong. 252 sales in 1 month for this price range is great. I mean, this is the highest we've ever had was just over 300, and that was during kind of the crazy time of 2021, 2022. So 252 sales in this price range is still really good. Now, this is 6.62 months supply, but this higher end luxury market always operates at a higher inventory. If you were to go back to like 2017, 2018, this was typically somewhere between 8 to 12 months supply. So it's a little bit weird because the luxury market, just because there are less luxury buyers for those types of homes, kind of always operates at a higher inventory. But 6.62 for this price range is actually pretty good. And you can kind of see that list price to sales price ratio have been bouncing back and forth between 96 to 98 for the last few months. That, again, is really strong for this price point, because typically speaking, these higher end homes will take, they kind of start higher and they'll take price deductions, or they'll take offers that aren't quite as high. But really more sales in this price range than even we had last year. So, it's kind of an interesting market right now, because it really, really depends. And this is why you really need an agent who knows what's going on. It depends on the price point. It depends on the part of town. It depends on the type, definitely. So there's different markets even within our market. So one thing to look at here that's very interesting. So average sales price is kind of a tough thing to equate, because it can go up and down each month based off of one big sale or one, sale that came off the books or something. So this number fluctuates a little bit more. But for single family, 608,000. So the number that you will often see on the news is going to be the median sales price, which is 480,000. But that's not the average. That's the median. And the median fluctuates less each month, which is why I think they like to use that in the media. That's what LVR will release. But it's not an accurate description of what an average house is in Las Vegas. An average house in Las Vegas is 608. Doesn't mean you can't get a single family for less than that. You definitely can. I just saw a single family actually in Silverado Ranch this morning that was under 400. It's a fairly small single family, but you can still find those smaller single family houses for less than this. But this is a true reflection of what the average sales price is. Now, one thing to note on here, the condo townhome average sales price has been going down for the last 3 months, and it's actually technically negative. Now, we'll see. The best data comes from what's called FHFA, because it truly tracks what each house sold for each time it sells, and then it kind of extrapolates that data. But it's so accurate, and it takes a while to compile. It takes about 3 months for that to come out. So we won't really see that for about 2 to 3 months. So we'll see if those are really actually dropping in price. But you can definitely see the condo townhome. If you have somebody who's looking to get into an entry level, or you're possibly thinking about buying an investment house, you're definitely getting some crazy deals right now compared to what we've had in a very long time. I haven't seen people truly taking deals probably in about 8 years, really. So definitely a big difference between single family and condo townhome. Our month supply of inventory, kind of the same story. In single family, still pretty good, 3.3, but in condo townhome, 4.6. So condo townhome is definitely a neutral market. And like I said, I think for a lot of agents that don't understand this data, they think it's a buyer's market. Now, it's technically should be a neutral market at 4.6 month supply, but a lot of agents don't know that because they've never seen a 4.6 month supply. So I think they're kind of freaking out and letting their sellers make some fairly bad decisions on some of these deals. But if you're looking to buy in this price range, you should take advantage of that because it is a nice little window that we haven't had in quite a while. And this is kind of what I mean by this. So this is a close-up chart of our historical months of supply. So where these two green arrows are that you guys can see. So this is from basically the middle of 2012 into about the middle of 2016. We had an average month supply somewhere around 4.5, 4.6. You can see it kind of fluctuates a little bit, but prices went up from 2022 or from 2012 to 2016. Prices were going up. Now they weren't going up crazy. They're going up in general about 4 to 6% a year on average. But you can still see prices went up. Where that red area is where we are today, which again, in single family is still well below 4. And even in condo townhome is, just barely a little bit above 4, but even condo townhome, it's still less than it was from 2012 to 2016. It's just so many people who are in real estate now weren't in real estate back on those green arrow years. So to them, they think this is crazy. They think like, oh my God, the market's just falling apart because they don't know what they're doing. They just don't have that data. They haven't really looked at it. They're not familiar with it. They just know what's happened in the last 5 years. So it's an interesting time where you can kind of take advantage of some of the fact that there is a lot of bad information going on out there because really prices should not be going down. So this is something from Business Insider. So a lot of anxiety about the housing market, but really economists who study the housing market, and this is what I see with our local data, generally do not expect to crash in 2025 or beyond unless the economic outlook changes. Now, obviously, predicting the economy has gotten very interesting, but the economy also doesn't necessarily dictate what's going on in real estate. So this is a really good way to kind of see some of these things visually. So our inventory has definitely gone up. This is nationally speaking. This isn't in our market. These are some national stats. Nationally speaking, we're up 30% from the same time last year in terms of inventory, which a lot of people, again, are kind of freaking out about, but we're still 16.3% below what we were pre-pandemic. And I think a lot of people have just forgotten what life was like before COVID. That was almost like a reset for some people. So really what we're in now, real estate's been going up basically since the end of 2011, early 2012, all the way through. We really have never had any significant price decreases, especially in our market here in Las Vegas. But, people, again, they've kind of reset their expectations to what it was like during COVID. And COVID was this weird outlier where we had no inventory because the interest rates were so low. So a good way to kind of understand what's going on there. So when you see people saying, oh, prices are going down, not really. We don't have data. Now, some places they are. There's definitely places in Florida, in Texas, and some other areas where you see prices going down. For us, we're not seeing prices going down. We're seeing prices moderate. And this is what the appreciation is. And that's kind of what this chart is showing. So is the home appreciation going down? Yes. But we're not seeing prices go down up to this point. Okay. And I don't think it's something that we're going to see. We're going to keep monitoring this. But it's a good thing to understand the difference between price growth going down versus prices going down. And I think that's not always communicated terribly well in the media and some of these other places. As far as our interest rates, March was a really good month for us in terms of sales. As far as our local market, April, not quite as good. May, not quite as good, still fine, but really it was because of this. You can kind of see in March, we had a lot of stability with interest rates. And then in April and really even moving into May, we've kind of had this all over the place. And this has kind of been the same thing that you've seen in the stock market and Bitcoin and a lot of these things where everything is just very reactionary from day to day. Everybody's reacting to every single piece of news. And we've just kind of had a lot of volatility that I feel like has caused a lot of people to just kind of freeze and they're all just waiting to see what's happened. But again, for I think people that are savvy, this is actually an opportunity to take advantage of the fact that a lot of people are freezing when it probably doesn't make sense. They're just scared because of the volatility that they're seeing. Inflation has been going down quite a bit. Much, much better news. The Fed target rate is still 2%, but we're at 2.6, which is the lowest we've been since 2021. So we're definitely getting closer to where they want to be, which is going to explain this next slide, because basically this is a ton of experts that they surveyed, and most of them, about 66%, almost 67%, think there's either going to be 3 to 4 rate cuts this year. Now, the Fed rate cuts doesn't necessarily mean mortgage rates will go down, but it is a positive sign And especially as you see inflation continue to come down and everything, this is something that we should see. But I think this is a really important chart to remember. When I'm talking to people, whether they're actually interested in buying or they're just curious, I think the general consensus is you should wait to buy because interest rates are going to come down. Now, do I think that's going to happen? I do, but I think it's going to be a very incremental drop. I don't think you're going to see this crazy drop. And again, our prices in Las Vegas, especially because of how many businesses that we have coming here, because of how many people we have coming from higher price states. I think a lot of people who've lived in Vegas for a long time feel like, oh, Vegas has gotten so crazy expensive, prices have to go down. But, obviously California is cheating. They're always more expensive, but really go anywhere. Go to Phoenix, go to Salt Lake. You can't find a metropolitan area that's anywhere near us that's cheaper in terms of housing than what we still have. It's gotten more expensive than it was 10 years ago for sure. But you have to look at this in a comparative way. If somebody's thinking of moving out of one of those more expensive states and they're primarily concerned as price, Nevada is incredibly attractive. We don't have a state income tax. We have a lot of very business friendly stuff, which is why they're bringing their businesses here. And again, we're still cheaper than almost every metropolitan area on this side of the Mississippi. I mean, Kansas and Oklahoma, but nobody wants to move there. So we're fine. That's really the only places that are going to be cheaper. So as you can see, interest rates pretty much across the board are projected to come down, but nothing crazy. You're not going to see 5% interest rates this year. I don't think, who knows, but I don't think you're going to see that. So this next thing is going to make this kind of make sense about what we should be doing. Should we be buying now or buying later? Now, the positive thing about buying now is, like I said, we're getting people some crazy deals. One of our last buyers got the house again, 10 grand below what it appraised for and $17,000 in closing costs. Now, you can buy down your interest rate with some of that closing costs. You can buy it down pretty significantly. So this is just a projection that I ran so that you can kind of see what this could look like. This is at a $500,000 purchase price. This is at only 5% down. But what this is a 6.25% interest rate, which if you get closing costs, is totally realistic that you could buy down your interest rate to 6.25. Totally realistic. Okay. So I did a very, very conservative price appreciation of 2.5% over the next 2 years. So you can see that here in the middle, 2.5% appreciation rate. Now, historically, in the whole country for the last 100 years, housing goes up 3.5%. So I'm a percent below that. In Las Vegas over the last 30 years, it's 5.1%. So I'm basically half of what our historical average is. I'm being very conservative. I'm not trying to sell people on housing's just going to go up astronomically. Let's be super conservative, okay? So basically what this would mean is this same $500,000 house in 2 years is 525. And that's probably about the time period that you're going to be seeing a significant interest rate drop to where it's really going to make a big difference in your payment. So if you buy today, you take advantage of some of these people that are kind of freaking out and some of these agents that don't know how to tell people what's going on, and you buy that interest rate down, you can enjoy that $25,000 in appreciation. You can enjoy all the tax benefits that you're getting because over 80% of your mortgage payments in the first year are going to be tax deductible. So, if you can afford this $3,500 payment, you're getting yourself about a $38,000, $40,000 tax break. That's what you're going to be able to take off your taxes. That's going to be deductible. You're getting some pretty good stuff there, right? Well, not quite that much. Sorry, about 34,000. But in either case, if you were to wait and buy this in 2 years, now you're going to be paying 525 instead of 500 for it. Now your interest rate's 5.25, but really your payment's not any better because you can still refi this same thing down in 2 years to that 5.25. So as long as you can, now don't get yourself into a payment you can't afford. I'm not telling people that, but you can kind of see your total equity in 2027 as we project out 61,000 in 2027. If you wait for 2 years, 26. So right now, I just don't see waiting being a good option for very many people, just because with all the incentives that you could be getting, whether it's a new build or a resale, they're both offering tons and tons of incentives. If you know what's going on, you can really get yourself a great deal. So I think that for people that are waiting, it's just not going to go down fast enough in terms of the interest rate to where it's going to make a difference unless you wait so long that now you've missed out on all the benefits. And so it's just not going to work out. So for buyers, more choices and better deals, like I said, almost across the board, unless you're buying like a $800,000-$900,000 house that's perfect. Those ones are still pretty competitive, but everything else you're getting some better deals on. Like I said, your closing cost incentives and the ability to renovate homes. So you can get closing cost incentives that you can then use to renovate the home. So you can sometimes get houses that are sitting because they're not real attractive, but for 10 grand, you can do some pretty nice things and make it look a little bit better. And then, like I said, our mid-range is still the most competitive. And I would say that depending on the part of town and what it is, that really goes all the way up to like 9, sometimes even close to $1 million. Now for sellers, Correct pricing is the absolute key. For houses that are especially in that more competitive range and they're priced well, they're still selling just fine. You know, we had a listing a couple of months ago for 1.3 that sold basically for list price, and it sold in less than a month because we priced it well. You know, we marketed it well, obviously. But you can still sell these homes even in this market that's moving a little slower, but we have to price them correctly. If you're pricing up too crazy high, people are just letting it sit. Still technically a seller's market. Like I said, it's just not crazy. It's not 2021 seller's market, but we're never going to see a seller's market like that again. And then condo townhome are definitely the toughest market. If you're selling in that market, you really, really have to be priced correctly. You want to make sure that the conditions as decent as you can make it. You know, a lot of times people don't want to dump a bunch of money into it, but there's little things you can do that make it a lot more attractive, and that's really important. So that's what we got for you guys. If you guys have questions on this, please feel free to reach out. I love giving good information to people because, again, there is so much bad information out there, and just most agents are not educating people well on this. So whether you're just curious, whether you're actually looking to do something, it's great to have the right information, and that's what we try to provide. Thanks.